Guys, hello. Okay, so this is part 2 of a short video series to understand if we're going to hire somebody new, how much more sales do we really need for our company? Rather than using our gut, we can use our financial statement or our income statement or P&L. Okay? Let's go back to our example. So we were going to pay $100,000 for this new person. In our example, our burden was 15%, so it was an additional 15% that we pay for federal and state income taxes, unemployment insurance, workers' comp insurance, days off, time off, all that stuff. Our example was 15%. Take 100,000, multiply by 1.15, 115,000. We need to know what our gross profit is, which percentage, which is our gross profit divided by our sales over the last 12 months or the last fiscal year. The last 12 months, the last trailing 12 months is your most accurate number. I would use that. Okay? So gross profit for the last 12 months divided by sales for the last 12 months. Whatever that number is, in our example, I just took a number as 35%. Your number is obviously going to be different. Now, we take our cost, 115,000, divided by our gross profit as a decimal now. And we found that it was $328,571 in additional sales that we need to support this salary. This is almost a factor of 3. So it's important to understand that, because now you know you got to create this amount of sales to add this person, because if you don't, it's going to eat into your profits. Okay, now let's look at this example and try to understand why this logic works. Okay, so if we have $1 million in sales and our cost of goods sold is $650,000, that leaves us with $350,000. Wrong color. $350,000 in gross profit. So this is gross profit. This is our cost of goods sold, and this is our sales. Okay. So this is an example where your gross profit percentage is 35%. We take our gross profit, divide by our sales. So gross profit percentage is 35%. So if we collect $1 in sales, and we know our cost of goods sold here in this example, 65%, that means 65 cents we can't use. We're left with 35 cents. This is our gross profit. Okay. That means for this additional sales of $328,571, if we multiply that by 0.35, which is our gross profit percentage, we're going to get our 115,000 rounded off. Okay? So, again, cost of goods sold, we can't use that from our collections. This is gone. It's gone to produce the product. It's gone to produce the service. We have not. The only thing that we can do is use our remaining gross profit to pay for that employee. So for $1 worth of sales, we really only have 35 cents in our example to use for any expenses, and whatever's left over is our profit. So hopefully that explains the logic. If you have any questions, post them down below. Now, fun fact, Six Flags theme park, Six Flags over Texas. Where did it get its name? It represents the 6 flags that flew over Texas at one point in time. There were 6 countries that controlled Texas. So they are the Kingdom of Spain, the Kingdom of France, the Republic of Mexico, the Republic of Texas, the Confederate States of America, and of course the USA. Fun fact. If you enjoyed the video, please like this video, subscribe, and share that with any other business owners that you feel might be helped by this particular information and the video series in general. Until next time, we'll see you. Have a great day.